Welcome to Season 2 of the Crypto Pulse podcast, your ultimate guide to the world of crypto, Bitcoin, and world economics. We're here to guide you through the crypto universe with thought-provoking topics, in-depth knowledge, and information to help you make informed decisions. We'll also be interviewing some of the best minds in the industry, such as CEOs of crypto projects, traders, economists, authors, and development teams from around the globe. And now for the episode.
This episode is brought to you by Yield App, and daily compounding interest on your digital assets with its intuitive web platform and their newly launched mobile app, which is available for download on both iOS and Android. Plus, don't forget to refer your friends to earn extra rewards. Visit yield.app for more information. Hello and welcome back to the Crypto Pulse podcast for another one of our incredible interviews. Now today we sit down with Matt and Sergio, who are the co-founders of Lago Finance, who are building Kadena's first native stablecoin and the first bridge to the Ethereum network. We hope you enjoy. Matt, Sergio, welcome to Crypto Pulse. Thank you so much for joining us, and a special shout out to Michaela at Kadena for organising this, because we're really excited to start talking to some projects that are building on the Kadena platform. It would be really good to start off with a quick introduction, actually. So, Matt, maybe you want to go first for us. So tell us a little bit about yourself and your background and how you got involved in the crypto space.
That's a good question. So actually, I got involved back in 2015, around the time Ethereum had just launched. The idea of a decentralized world computer really struck me, like something where instead of the Web 2 space where you have databases and centralized technology running the world, you could have this decentralized full access computer was something that kind of blew my mind at the time. And then so at that point, I was in my master's program. I was in master's in finance. I decided that I should probably drop out and join this new revolution. I thought it was really going to change the world. I started doing an algorithmic trading platform. It's kind of like two sides. Had like a retail side for the 24/7, crypto trader degen type market, then an institutional side where you could get big data. Back at that time, there wasn't really a whole lot of that kind of technology. They didn't really have the tool sets. There wasn't even bigger players who were into that game because crypto was so niche at that point. So we did that for a while. I decided to go ahead and go back into the traditional world. So I ran an FX desk for about a year and a half. That was a really good experience. I saw the back end of the financial world. And I really realized from that, yeah, crypto is the future. When you see transactions that take 3 weeks to actually settle, and it's not, the things that they're telling clients aren't really happening in the back end, and you see the lack of finality, you truly begin to realize how important crypto is. And so I immediately then wanted to get back. So I went to a couple different startups. One of the major ones was Nodal, which was really interesting and a good experience. I worked as a data analyst there. And then I met Sergio along the way, and we decided that we wanted to go ahead and do something totally different and try to change things up in the crypto world by bringing, the traditional experience with the Web3 experience.
Great. That sounds amazing. I think the whole topic of traditional FX would be a whole other episode in itself, because I'd love to understand more about that. But Sergio, maybe you could do a quick intro for yourself and let us know how you got into crypto and what led you to there in the first place.
Yeah. Well, thanks for having us here, Ben and Kevin.
Pleasure.
It's going to be fun. I'm looking forward to this conversation. Let's start with my story. It's a long story. It starts in Italy, where I grew up initially. I dropped out of university. I was studying electronic engineering, which was very interesting, but that wasn't really my vocation, right? I wanted to build, to expand, to grow companies and businesses and teams, and learning how to dope silicon layers to drive electrons up and down was not necessarily in line with that. No, but most importantly, I was already running a business, and so it was scaling up, and I needed the time and attention there. So it was a Web 1 company. It was anything from voice over IP infrastructure to traditional Web 1, ISP hosting and other web services. Also, Italy wasn't really a scaling environment for my ambitions. So I decided to sell that business, exit, and move to Asia. I lived 15 years around Asia, anywhere from China and Korea, mostly in Hong Kong and also some in Taiwan. I learned a lot there, but also I started a Web2 company. I was doing social data mining, mostly for the travel industry. It was the time where social mining was good before it became not good. And there was still a time when it was innovative and providing value added for everyone involved. And I sold that to the largest African online travel agency, a company called Travel Start, amazing company that I love to date. And it was split between Taiwan, where I was building a mobile dev team, and Cape Town, South Africa, where I was head of innovation and monitoring also payments and mobile for the Africa, Middle East region. So that's where I really started to understand that the payment landscape around the world was incredibly fragmented, especially in the emerging markets. And I also, at the time, I started to have my first children, and I decided that it was time to turn page again. So I moved to the Bay Area, San Francisco, where I started looking very close into crypto. I was initially introduced by a Tasmanian friend who gave me some Bitcoin for fun, just to spread the word.
Good friend.
2013 or 14, I think. Yeah, I'm a very good friend.
Yeah.
Still owe him a bit, and for that. And he got me thinking, and I started looking into deeper and deeper without really having a specific idea to work in crypto. But then when I moved to San Francisco in 2016, and everything started to happen at a much faster pace, I first went into crypto with an angle with an angel investor angle, but also with self-sovereignty vision about identity and about the core fundamentals of cryptography. So asymmetric cryptography is something that people still today don't fully understand when they dabble with crypto. Sure, someone knows about the existence of a public and a private key, and that's all they know. And it's fine, but if you deeply understand why that is and what it enables, elliptic cryptography and all the curves, then you start understanding all the potential. And a totally untapped area of cryptographic cryptocurrencies is digital identity and blockchains. Is digital identity and decentralized identities. So great progress have been made by DID and verifiable credentials and Jack Dorsey's initiative with Web5 in the past few months. I think that the pace is accelerating there, and the standardization is coming to a point where new projects and apps and entrepreneurs can start using building components. But without digressing, that's one of the reasons why I got into crypto. But of course, then I also started looking into payments, and I work for companies making secure element chips for highly sophisticated payment solutions involving crypto. But also I work with Reddit to understand the future of communities and crypto. So I've seen multiple aspects of the crypto story, and I have deep passion for technology. So I can see the stack from the beginning to an end. I'm never really a banker, so Matt here is helping me with the traditional finance background. When it's time to understand really how a bank reserve works, then he chimes in. But for all the rest, I've been building companies in Web 1 and 2, so now I'm happy to be building on Web 3.
Nice. It sounds like you guys are a match made in heaven. Complementary skills, right?
How did you meet? How did you get to know each other?
We met at the company that Matt mentioned earlier, Nodal, which was one of my first investments in crypto. And so I've been an advisor forever. And when Matt wanted to quit that company a few months ago, then I caught him with a net, not going anywhere.
I love that. And so from that initial meeting, I mean, was this kind of your original idea, Sergio, and then you were kind of like looking to build out the team, or was this something that you kind of dreamt up together? I'd love to hear the story about what you're building now and kind of the sort of journey to discovering that this thing was needed.
Yeah, so it's there's anecdotes and the overarching narrative. Okay, so overarching narrative is that after all I've done in Web 1, 2, and 3 and all the ventures, and after also working more or less closely with some layer ones, I decided I wanted to build again and wear the entrepreneur's clothes. And so earlier this year, around January, February, I started to honing in again on doing my own venture, and that's also when Matt was joining. And so it was an interesting convergence of ideas. And since we live near each other, we met multiple times on my poolside at my home, and we drank a lot of beers, and we kept analyzing opportunities with pros and cons. We wrote a lot of memos and papers. It was a very analytical approach, actually, despite the inebriation and the creativity.
All the best meetings happen with a few beers.
Exactly. No, we that would only start at 5 p.m. usually. So the first part of the day was sober, and then the latter part was
as
productive.
It should be. Yeah.
And yeah, Matt, you can continue from here. You probably remember more.
Yeah, I met Sergio, and he was one of the people who I don't think I've ever met someone who can execute the way that he can. You know, he had been in operations when I had been working with him, and he was just the kind of person that could get stuff done. And you know, we really needed that, I thought, in a project like this. So yeah, it kind of came together through both of us. You know, I really wanted to do something where I felt like I was going to make a difference, and you know, provide more needed infrastructure if that was going to be important to the the long run for crypto. So. Yeah, you know, there was a lot of idea phase of, you know, what is the best way to do this.
It's very flattering.
Yeah.
You shouldn't have, but it's okay. Thanks. The important thing is that we did analyze a lot of parallel potential opportunities, and clearly 3-4 months ago, it was the prices were starting to drop, but it wasn't still crashing. And so the type of opportunities there are different from those today, and I'm happy we picked what we picked. But of all those opportunities, I think some were more creative and some were more copycat, like this for that, like Uber for a different environment or a different country. We also envisioned and tried a bit of the rocket internet approach of cookie cutter. Copy-paste startups in different environments, different layer ones, and I still think those are valid propositions. But in hindsight, it was good that we didn't pick them because they would have relied on a bull market to get initial traction. Whereas we honed in on something that is less reliant on hype and high velocity, and more reliant on fundamental growth of or transformation of finance.
So I guess that kind of leads me on to my next question then. So for some of our listeners at home, it would be good to talk really specifically about what you guys are building and what problems you're solving, and additionally why you've chosen to build on the Kadena blockchain. Because I know that for some of the Kadena fans that are listening in today, that's like the golden question.
Yeah, here. So I'll start with the Kadena part. I think Kadena is probably one of the most technically superior blockchains that exists currently. I think the proof of work architecture is much better than proof of stake. I think that right now their horizontal scaling solution through having multiple chains that all run simultaneously is something, I mean, and I know that's complicated probably for some of the viewers at home. I mean, very simply, it's like if you had one Bitcoin chain and then you continued to add on more and more chains to that original chain and they were all linked together. So that's a way that you can think about it in a more of a simple view. But this is a system that can then scale permanently and can scale out infinitely. So right now they have 20 chains. They could go to 100. They could go to 1,000. That's really the only solution that I see hitting the actual 100 million user mark, like you would need for a traditional financial application. So there are other chains like Solana and Avalanche that have gotten a lot of attention recently. But right now, the way that their systems are built, their queues don't work like they're supposed to. I mean, you have constant outages. You have no ability to load balance. Yeah. It's really a problem going into the future, I think, and trying to build a scalable application. I just don't see those chains working as well as Kadena is going to work into the future.
Yeah, and more broadly about the vision for Lago Finance, it's clearly a product-driven vision. We identified some big problems to solve in the finance world. We're big believers in the convergence of traditional finance and DeFi. We don't like to call it neither TradFi nor DeFi nor DiFi or digital finance. It's finance, okay? It's money going from A to B, and that's always going to be the case. So there's going to be convergence of the various ways money goes from A to B or stays in C, but that's it's purely semantics, frankly. It's all going to converge into the most optimal solution. And so when you talk about optimization and efficiency, the first comparison with the forces of nature that comes to mind is how liquidity flows downstream with the path of least resistance. And in the mountains, it goes into lakes. And so here I am, I'm Italian, and I call the company Lago Finance. Lago means lake in Italian and some other Latin languages.
Nice.
So that's the vision. Of course, there's a few steps from simply starting to put together the first smart contracts to really have lakes of liquidity. And the first steps is to allow the liquidity to stream from other networks, other layer ones, where it's more prominent. There's more quantity to Kadena. So we're deploying a bridge, Ethereum to Kadena, in the very coming days. And that's going to unlock the other products. Second product coming is Stablecoin.
Mm-hmm.
Stablecoin is necessary for a lot of things. Not only is necessary for Kadena to have a natively anchored currency that is US dollar pegged and therefore helps hedging against volatility, and also helps all the DEX applications anchoring their prices to the US dollar. That's a traditional DeFi use case. But also the stable coins have been they've been on the news recently.
I was going to say, that was kind of going to be my question, actually. I mean, it's sort of like the elephant in the room, right? The stablecoin discussion at the moment.
Let's talk about the elephant, no problem.
Yeah, right. I mean, after the Terra Luna saga a couple of weeks ago, I mean, was it 4 weeks? Stable coins have been talked about a lot. So I wonder, what's kind of your perspective on that? And sort of, are there any lessons to be learned from that with what you guys are building?
Yeah. So the macro perspective is that money has to flow a little more fluidly on peer-to-peer, but also international, institutional level.
Of course.
Today is very inefficient.
Yeah.
Central bank digital currencies are, I don't know if you're familiar with them and the initiatives and projects that are happening. They're government-driven digital currency
the CBDC situation
projects.
Yeah.
And they're progressing at government speed. So eventually we will see something, and it's possibly going to be infrastructural, important. It's definitely going to be pervasive. It's most surely not going to be very interoperable and composable from day one. And it's going to be a journey of 100 years. And I'm very supportive of that. I think there's a lot of good things that can happen with CBDCs. Some governments will tweak them in a way that enforces their political and speech freedom choices. Other governments will instead use them as instrument of prosperity and growth. But we'll see. But my point is that's not happening tomorrow. It's going to be a bit of a journey before that plays out and is executed properly. And in the meanwhile, call it 5 years, 10 years, money has to flow a little more fluidly. And that's where stablecoins really fill the gap. Stablecoins are instantly settling. They're programmable money. They're digital. It lives on decentralized ledgers most of the time. And so they really are money plus. They're cash plus a lot of benefits. And the market for growth for stablecoins, therefore, can be easily quantified in a percentage of the total circulating global money supply, called M1, which is today $70 trillion US dollars.
Yeah,
trillion with T.
huge.
Yeah, I know, it's a big number. And it's there. I mean, some countries like, I don't know, Japan or others have 3 trillion equivalent of M1. Some others like US, it's 30-ish, probably the biggest. Eurozone is, I don't know, 10, 20, something like that. And all of the circulating money supply in the next 5 years, before CBDCs are usable and effective and pervasive, are going to be in the form of stablecoins. Just better. It's a path of least resistance. And so we see at least a $10 trillion opportunity for stablecoins to be there and serve the purpose. And of course, there's going to be different flavors of stablecoins within this 10 trillion market. Some are already poised to be leaders in the space. We're a very big fan of USDC, for example. And Jeremy Allaire's company is a really good way to approach the problem, to be hyper regulated and observant of any possible future and present regulation, and fully collateralized, obviously.
That's a big one.
Yeah, other stablecoins have taken a dramatically different approach and failed. And frankly, it's good that they failed, because the fact that they failed so quick and fast means that the system is efficient and automatically eradicates the financial designs that are not meant to be.
Yeah,
it's a bit Darwinian as an approach, but it worked.
Yeah, absolutely. I mean, we spoke about the particular saga that happened recently, and we talked about, I mean, it was really sort of a monetary experiment, wasn't it? That was sort of released into the wild way before it was proven to be anything, useful. And I agree. I think, whilst the collapse was obviously really, really problematic and terrible for lots of people, I think it's proven that actually that as a model just doesn't work.
I want to say a big thank you to YieldApp for sponsoring this podcast. Now, we may be in the midst of a bear market, but that's no reason to stop earning on your digital assets. YieldApp allows you to earn daily compounding interest on the biggest digital assets at the click of a button. YieldApp is a licensed fintech company built by a team with a strong background in traditional finance. YieldApp offers instant asset conversions, fiat on-ramp, auto compounding, and security features such as activity log, transaction history, and more. Simply deposit your digital assets and click to start earning daily rewards. And you can earn up to 1,000 of their native token, YLD, by referring your friends to YieldApp. You will also automatically join their monthly referral competition for a chance to win massive prizes.
I'd be kind of interested to hear how what your sort of approach is to this. I mean, you talk about like fully collateralized, decentralized stable coins. Is that the route that you're going down, or do you have something else that you're doing?
Yeah, Matt is our tokenomics guru, so I'll let him speak. But first, I want to debunk the myth that algorithmic stablecoin is a mutually exclusive feature with fully collateralized. Stablecoins can be fully backed one-on-one by the currency they are pegged to, and also they can have algorithmic aspects to their governance and mechanics. Matt can dive a little bit deeper in that.
Yeah, well, I would also just start out by saying that I think that the incentive structure was the big issue with the Terra Luna thing. Offering 20% yields and saying it was risk-free was just never going to work in reality. So I think that was the big red flag that everyone seemed to miss. And I think that's an issue even now. I mean, I still think, some 8%. I mean, probably too high. I mean, there's nothing that's really going to give you an 8% rate of return and, actually be able to return that. I mean, it kind of does start to look a little bit more like a Ponzi scheme than an actual, financial instrument, which is a problem. As far as from our perspective, though, we want to focus much more on the reliability and the stability of our token rather than providing these incentive methods. So we want to take, some more conservative approaches than even most of the other decentralized stablecoins out there, and really marry that idea of the fiat-backed stablecoin with the algorithmic stablecoin in a way that people haven't seen before. And we think that that is going to actually be long-term the best stablecoin model.
Yeah, so there's three main parameters that we look at. One is full redeemability. And clearly USDC has paved the way, and either you have the collateral currency to back it up 100% or you don't. It's a very clear cut at 100% collateralization. So our goal is to keep it above 100 all the time. But at the same time, we want to be inspired by the fractional model introduced by Frax. And so the capital efficiency when it comes to minting, burning, and all the algorithmic market operations, the AMOs, that help monetizing the treasury and the market cap better than just letting some dollars sit in a bank account or in commercial paper. And the third and most important, frankly, for the future of the stablecoin is decentralized governance. And that's where MakerDAO has set the standards really well many years ago. and blaze the trail that we're following. Having a DAO manage the treasury and manage the code, managing the roadmap is very important. It should not be a company. It should be a decentralized entity overall. Otherwise, frankly, the benefits of using a layer one blockchain for transacting are very much reduced if behind there's a single player individual that just can arbitrarily lock accounts, freeze accounts, revoke tokens, which are publicly available and publicly scrutinizable features of the USDT and USDC smart contracts.
It reminds me back of my time at the FX desk, because you have the spreadsheet, it's like a spreadsheet basically where you just move money back and forth. And, there's really, if you have a centralized control in the back end and somebody can just, because basically when it comes down to it, a stable coin is just like an entry on the table, basically. All ERC20s are. So if you can just go in and you can mark off that or move the amounts wherever you want, it's a bank. That's essentially what it comes down to, is it has the exact characteristics of a centralized entity. And that's what we don't want, because that's the whole point of why we all moved to Web3, I thought, was for the decentralization aspect. But if you build everything on centralized rails, you've kind of taken away the whole ethos of what the original intent of decentralization and crypto was.
Sure. You may as well use a spreadsheet, right? Just move the numbers around a spreadsheet. I wanted to just touch a little bit on your roadmap, guys, because I know what you're building is pretty ambitious. And obviously, we spoke about on the show a few times that we're now entering into what seems to be a long crypto winter and a bit of a bear market. We know this is the best time to be building, but how are you guys approaching this? Are you planning to launch in Q3 of this year? What's the release schedule looking like?
Yes, so the bridge is coming out real soon. Cool. Talking days, and it's a trusted bridge, so of course we prioritized UX and security over decentralization for that part of the product. We foresee other bridges coming to connect Kadena with other blockchains, and we're happy to have a fair competition with other bridges. Our key product is clearly the stablecoin. So as of today, we're building the bridge because no one else did it, and we need it to bring assets to collateralize the stablecoin, not because we're bridge fans. Although bridges are important, but it's a whole another topic that we can dive into later. After all, everything is a bridge between an asset class and another, or a network and another. Okay, so everything can be even the stablecoin in its basic form is a bridge between digital currency and more traditional financial rails. So the stablecoin is coming out in phases. The first phase will have a very simple one-on-one collateralization. So its simple nature will make it relatively easy to deploy. It's actually an iteration on the bridge if you think about it. Take USDC, put it in a box, and issue and mint USD2. It's the name of our stablecoin on the other end. So that shouldn't take longer than 3 or 4 weeks after the bridge, really, to have. So yes, we're absolutely sticking to Q3 for the first version. Now, our vision for growth is very ambitious. So the next phases of stablecoin deployment are the introduction of operational collateral ratio below 100%. They will introduce capital efficiency, and that's going to play out towards the end of the summer, so end of Q3, let's say. And then we're going to introduce algorithms that automatically manage this operational collateral ratio, and that's going to be the interesting and juicy part. Also, the introduction of the collateral ratio implies the existence of a reserve token, the Lago token, and that will enable governance. So Matt can dive a little bit more into the governance, but that's definitely going to take a few more quarters. So we see in our vision, the stablecoin will reach some form of maturity with these 3 phases and the governance somewhere next year. I'm not ready to say if it's Q1 or Q2, Q3, Q4, because there's also a lot of market conditions that can affect the roadmap, and that's something we can't control.
Well, I have a question about the current market conditions. I mean, for retail investors, everyone's pretty scared right now. But for entrepreneurs like yourself that are building in this space, how much of an impact does that have in terms of being able to have financial runway for this and to track the right talent and to kind of operate in a downward market?
Well, first of all, any retail investor should always be scared to invest anything that is a high risk asset class. So if they're scared now, they should be scared before as well. And if they're scared now, they should also be scared when things start going up. That's my view.
Always be scared. Okay.
Always be scared. It's gonna help.
Live in fear, guys. Live in fear.
It's survival.
Right.
It's finest. No, we've been in the space for a while, where we have our funding source that have been developed through decades of experiences, networking, successes, and accumulation. So we absolutely have zero exposure to any asset class, and there's frankly nothing has changed for us. Sure, the investors' mood has changed a bit. But the serious investors had allocated their funds to invest in any case during the past years. I mean, A16Z closed their 4.5 billion, I think, round a couple of weeks ago or something like that. So
yeah, I think I saw that.
There's really not a big problem with the serious guys.
Maybe Matt, we could talk about the governance coin. I just made a note because I wanted to come back to that. So maybe we could talk about that.
Yeah, sure. Yeah. So the governance token is going to use a vote escrow system. We're not fully releasing all the details yet, but a vote escrow system at its core is a way to lock the token. And then by locking the token, the longer you lock the token for, you get a bigger share of the voting power. We think this model is really great because it incentivizes everyone to act in the right way. And also, it aligns incentives across everyone. Basically the people who have the highest voting percentage are the people who are willing to lock the longest, which is very important, I think, for the long term. You don't want people who can just, stake and then immediately go away, like stake for the vote and then just like drop off. So we think that kind of system really helps with governance and also with the distribution of rewards. So basically we're going to be also providing along that same lines of the voting shares of the distribution of the revenue from treasury management. So then people who have locked their tokens for longer are going to then have a larger portion of the rewards. So yeah, we haven't fully fleshed out the system, or we're not really ready to release that part of it yet, but it's going to be very exciting. We think it's going to be kind of a new rendition on an old model that we think is very powerful.
100%. That's very, very cool. Is this the model that you hashed out over beers by the poolside? Is that one of those conversations?
Exactly. Yeah. We went through all of them. I mean,
nice. I like it.
Yeah, I'm a big DeFi fan, so I've gone through pretty much every major product and looked at all the different models. And tokenomics is my first love. So I really think that it's going to be a very strong offering by comparison to the rest of the major DeFi platforms.
Yeah, I mean, there were some very well-known DeFi platforms that set up by anonymous founders that I think you could just get governance tokens literally immediately, couldn't you? As soon as you're in. And there was I like the way that you're doing this. I think it's smart. So what are sort of your biggest challenges been from a building perspective? Because this is uncharted territory. Kadena is a new platform, albeit it's very well supported. But what have been your biggest challenges this far in terms of building Lago?
Well, besides hiring and talent,
always a big problem, isn't it?
Yeah,
for sure.
Despite the bear market, that's still a challenge. But again, luckily having been around for a while allows us to have some preferential channels. The biggest challenge is clearly that Kadena is a relatively new layer one, or at least it's new to growth. And so there's a lot of aspects of jumping on and using this technology that are not well documented. But on the other hand, the community is very strong. The mutual support of community members, the Kadena team also is very dedicated to making up for the lack of momentum of building. And so combining all together and in the end, it's definitely faster to start building on Pact than on Solidity. So if you start from scratch, you're much better off learning on Kadena. If you're a long-term Solidity person, well, then also the learning curve is going to be much smaller to learn to build on Pact. Maybe Matt can go a little bit deeper on Pact because he's been writing quite a few lines these days.
Yeah, I would say the biggest thing about Pact, is formal verification. Formal verification basically means that as you write every single line, as soon as you click enter, it tells you how it will work on the chain. So it will give you a big red, like stop sign if it's not going to work, and will give you the exact error message. This is way different. I've also coded in Solidity, and this is night and day different because with Solidity, I like to say that there's 10 ways to write Solidity and 8 of them are wrong. Either they're not optimized, they could potentially cause an exploit. So to me, having this ability to go line by line and know exactly how the code's going to run and whether it's going to work or not is huge. And also, because of how simplistic Pact is, there's really only a couple ways that you can write any individual line. It's a non-Turing complete language, which I know is kind of a complicated term, but that basically just means that it doesn't have recursion, it doesn't have loops, it doesn't have a lot of these other things like JavaScript does. They get people into issues like these, infinite loops that cause programs to crash. You don't have this concept of ownership in the same way. They have what they're called guards, and they're pretty simple ways to just define who should be able to interact with a smart contract. Really, the founders went from the ground up and built a language that I think is far superior to Solidity, and they did it in a totally different way with totally different constraints, thinking more from the standpoint of banks and the actual banking sector rather than like the typical, how do we just get people to build decentralized applications? So I think that's really a lot more powerful, and I think that people are going to see that over time.
My favorite aspect of building on Kadena is the key sets. The fact that it's so easy to define multi-signature schemes and roles in any contract or namespace, that it's embarrassingly simple. On Ethereum, really, you have to rely on Gnosis for multi-sig, or you can hack your own contract together, which again goes back to Solidity and all the ways you can mess that up. And I think that the fact, it's all about how quickly you can get up to speed, and that's going to be the next wave of blockchain development. And I wouldn't say mainstream adoption, but at least the next wave of Web 2 companies going to Web 3 is going to be defined by the point of least friction, the networks that allow developers to switch over from AWS to blockchain in the most efficient way. So Kadena has a good prospect of being a leading player there.
Yeah, we kind of talk about this on the show with sort of like infrastructure in Web 2, and we talked about how app development became really mainstream because of things like AWS and systems that came into play that just made the process much easier. And I think we're starting to see that now with Web 3, with sort of some of the layer 1 problems that we've had in scalabilities and bottlenecking. I mean, Kadena seems to be the one blockchain that finally solves that scalability issue, but are also building something that's simple enough for anybody to just start building on it. It's a really exciting thing to see.
So our producer Cal always puts this question into every interview. We don't always get around to asking people, but
you don't have to.
No, let's do it because this is a fun one. So Sergio, is there anybody in the crypto blockchain space that you look up to, or anybody that's been an inspiration for you?
Well, there's a long list. I'll cut it short for you, for our viewers.
Well, your top 20 then.
My top 100 Forbes Sergio list of crypto year 2022. Well, first of all, I'm only inspired by people that I've had the luck to meet in person. I think it only then you can really understand whether there's substance behind the form. And the first of these people is Jed McCaleb. What I like about Jed is that he's done it multiple times over. So it's not just one strike of luck or one moment of genius, one light bulb. That's like a whole LED strips of illumination there. He's a very technical person and can understand how a technology or or a program or something, an algorithm can play out years ahead, years beyond its inception. So that's why I like Jed. Another person I like is Rune Christensen. His vision for decentralized governance is also something that requires quite some skill to make a mind map of how potentially all the realities of diverging interests and incentives can play out over a very complicated network is genius, frankly. And MakerDAO is absolutely a case study for generations to come. Governance itself, besides decentralized governance, it's just governance. Just like DeFi and TradFi, let's do away with the semantics. Let's just call it good governance. And this world needs better governance in general. And
Sure
the
does.
the third one is Zuko Wilcox, also very charismatic person that has enough deep understanding of sophisticated technologies like zero knowledge proofs and snarks, and also can translate it into real world applications and for a purpose. That's the most important thing. So his ability to see the future of collaboration between components, projects, layer ones, and goes beyond a single company is remarkable.
Some very good answers there.
It's a great list.
I'm going to get our producer to put a link in the show notes to all those people's profiles so people can look them up if they're not familiar with them. Matt, your turn. You don't have to do 3. You can if you want, but no pressure. You don't have to say Sergio either.
I'll stick with my top one. Really, I think Vitalik is probably, Vitalik Buterin is my number one person. I think that that was really what drew me into the space at first, like I said at the beginning. I think that he's really created this entire industry in some ways. I mean, Bitcoin and what it had done at first was extremely thoughtful and interesting. And I think the whole Satoshi narrative was amazing that he just stepped away and then, actually gave us decentralization. But what Vitalik gave us was something much more interesting, which was programmable money. That entire idea. And that's basically sparked this entire new generation of people who are now thinking to themselves, what can we do with smart contracts? And, I don't even think we've begun to scratch the surface of what the answer is to that question and what his contribution is going to mean to everyone in the entire world. I mean, not to get too, macro on it, but yeah, I think he's such an important figure in the space.
Great answer. We'd love to interview him one day. So if you meet him at an event, just tap him on the shoulder and tell him he's got to come on our show. Some really good answers there, gents. Okay. So is there anything else that we want to cover before we say goodbye? Probably a really good place to end actually would be to let our listeners know where they can go and find out more about what you're doing and whether you have a Discord or a Telegram or anything that they can join if they've got questions or want to get updates.
So yeah, anyone can follow our progress on Lago.finance website. Of course, there's links to community interfaces there like Discord and Reddit. We are quite responsive on Discord. Questions asked, questions answered. Doesn't mean we're always going to give the answers you want, but at least we're not going to let it hang.
There will be an answer.
Yeah, we're very excited about the bridge launch in a few days. It's going to be the first step into a very big path, but every path starts with small steps, and we're big fans of going step by step. Little by little. The point is arriving there, and it's not going there fast.
Absolutely, and time, I would say, is probably on your side now, guys. And I think you've got an opportunity to build this well and build it right. But
yes,
yeah, it's exciting stuff. I think we obviously going to follow on the journey. And when you do launch in Q3, we'll give you guys a shout out on the show. But as always, we'll put the links to Lago Finance into the show notes and also links to your social media accounts. And yeah, just to say thanks very much for coming on. And as I say, we'll be following the journey really closely.
Thank you very much.
Yeah, thank you guys so much for having us.
Ben and Kevin, it was awesome talking to you.
Yeah, thanks very much, guys.
Thanks, guys. Appreciate it.
We hope you enjoyed this episode. It would mean the world to us if you could leave a review wherever you're listening. This really does help and allows other people to find us online. You can keep up to date with new releases of the podcast by subscribing and following us on Twitter or Instagram for the latest crypto-related news. Information provided by Crypto Pulse via this podcast, website, social media channels, and any other medium does not constitute financial advice, investment recommendations, or any other type of advice whatsoever. The Crypto Pulse team are not professional financial advisors. Trading and purchasing cryptocurrencies do carry risks, and anybody wishing to partake in such activities should seek professional advice.